There's a business loan out there that looks like a life raft, but is actually an anchor. Thousands of business owners grab onto it every single year, thinking it will save them, only to find themselves pulled under, drowning in payments that they can't escape. Most people don't know this, but the funding world is intentionally confusing. It's a maze designed to profit from your uncertainty and ignorance. You see an offer for fast cash in your inbox. You're stressed about payroll, and you take it. You just made a mistake that could potentially cost you your business if you don't handle it correctly. But what if you had a map? What if you knew the right path to take at every stage of your business's journey? That's what this is. I'm not just going to show you the different types of loans. I'm going to give you the exact sequence, the playbook that turns you from a desperate borrower into the exact type of business that lenders want to fund. This is how you stop guessing and start building. Chapter 1, the launchpad, your first smart money. The journey to funding begins before you even have a business. It starts with you and the most powerful tool you have right now, your personal credit. But this is where most people make their first mistake. They treat personal credit like a lifeline instead of a launch pad. There are two smart ways to use your personal credit to launch your dream. The first is 0% APR credit cards. If you have a 680 score or higher, you can access up to $150,000 at 0% interest for 6 to 24 months. And you can open these as business credit cards, keeping your personal credit safe. This is seed money. It's the fuel for your rocket ship. But if you max out these cards, you've just blown up the rocket on the launch pad. The key is to use no more than 30 to 35% of your available credit every month. This keeps your credit score strong for the next stage of the journey. The second tool is a personal term loan. If you're still at your 9 to 5 job or building your business as a side hustle, you still have verifiable income. Personal term loan lenders see that W-2 pay stub and are willing to give you cash directly into your account with a relatively fair interest rate. This isn't about going into personal debt. This is about a strategic first step. You are using your personal strength to give your business a foundation. You're using your credit as a tool, not a crutch. And that discipline is what separates the businesses that make it from those that don't. Once you have that initial capital, it's time to build something that can now stand on its own. Chapter 2, the crossroads, navigating the danger zone. You're 6 months in, maybe a year. You're making money. You have customers, and you're starting to feel real momentum. Congratulations, you've just entered what I call the danger zone. This is the point where the vultures start to circle. You'll get emails and calls offering you fast, easy money. They'll say things like $20,000 in 24 hours. This is most likely a merchant cash advance or MCA. An MCA isn't a loan. You're selling your future sales at a steep discount. They charge a factor rate, not an interest rate. A 1.4 factor rate may sound small, but on $20,000, it means you're paying back $28,000 in total. And you're paying it back with either daily micro payments or weekly withdrawals from your bank account. One slow week can trigger a cash flow crisis that spirals into a debt cycle, forcing you to take another MCA just to keep up with payments from the first one. An MCA is a sledgehammer. It's a destructive tool that should only be used in an emergency for a very specific high ROI, high return job, like buying a batch of inventory at a 70% discount that you know you could sell in a few weeks. For everything else, you need a better tool. You need a socket wrench. That tool is a business line of credit. It's a revolving source of funds you could draw from when you need it and pay back to use again. You only pay interest on what you use, making it perfect for managing cash flow, buying small pieces of equipment, or bridging a gap between projects. To qualify, you'll generally need to be in business for at least 1 year, with a credit score over 600 and revenues of at least $250K a year. It's a smart, flexible tool for business builders. Choosing the right tool at this stage is everything. One choice leads to control and stability. The other leads to a cycle of debt that is so difficult to get out of. The choice you make here determines if you're building a business or just digging yourself a hole. Chapter 3, the specialists. Unlocking niche power. As your business grows, your funding needs become more specific. You're no longer just looking for cash. you're looking to solve a specific problem. This is when you call in the specialist. The first specialist is for physical assets, equipment financing. Let's say you run a construction company and you need a new $80,000 excavator to take on bigger jobs. With equipment financing, the excavator itself is the collateral for the loan. This makes it one of the easiest loans to get approved for because the lender's risk is tied to the asset, not just your cash flow. You get the machine you need to grow with predictable monthly payments, and once it's paid off, you own the asset, which adds value to your company and to your balance sheet. The second specialist is also for cash flow gaps, similar to a line of credit, only secured, invoice factoring. This is for any business that sells to other businesses and has to wait 30, 60, or even 90 days to get paid. That wait can crush your cash flow. Invoice factoring solves this. You sell your unpaid invoices to a factoring company and they advance you up to 90% of the invoice value, often within 24 hours. They then collect the payment from your customer. You get the cash you've already earned right when you need it. It's not a loan, it's an advance on your own money. These are not generic loans. They are precise solutions to common business bottlenecks. Using them shows you're thinking like a CFO. You're not just asking for money, you're strategically investing in the exact area of your business that will unlock the next level of growth. Chapter 4, the legacy. Reaching the promised land. You've used your personal credit wisely. You've navigated the danger zone and built a solid foundation. You've used specialist tools to grow strategically. Now, after at least 2 years of hard work of proving your model, the big doors open. Welcome to the promised land, institutional funding. This is where you find business term loans and SBA loans. They are the championship rings of the funding world. A traditional term loan from a bank gives you a lump sum of cash with a low fixed interest rate and a repayment term of several years. This is the capital you use to open a second location, launch a major new product line, or make a strategic acquisition of some sorts. And then there are SBA loans like the 7A and 504 programs. These are backed by the government, which means banks can offer you the best possible terms, sometimes up to 10 or even 25 years to repay. The SBA 7A is the workhorse, perfect for working capital, refinancing debt, or buying a competitor. The SBA 504 is for major asset purchases, like buying the building your business operates in. Getting one of these loans is more than a transaction. It's a validation. It's the financial world looking at what you built and saying, we believe in this. This is built to last. But you don't get here by accident. You get here by following the sequence, by making the right choices at every stage, by playing chess while everyone else is playing checkers. You now have the map. You've seen the 4 stages of the journey. You can try to navigate it yourself, risking wrong turns and costly mistakes, or you can get an expert guide. Below this video, there's a link. Click it and book a call with my team. We will underwrite your file and give you a customized funding blueprint for your business for free. This isn't a sales pitch. It's a strategy session. We'll show you exactly where you're at on this map and the exact steps you need to take next. No pitch, no pressure, just a clear roadmap to the capital your business deserves. Don't let another day pass running on fumes. Don't let confusion hold you back from your vision. Click the link and let's build your legacy together.